Good evening. It's Vijay here. Today is Sunday, 14th September 2025. Welcome to our weekend review where we talk about what the major events which happened over the weekend and how they will cast a shadow over the next week, next fortnight, next month and maybe next year. So something very interesting has happened in the last few days. Trump, who was, very anti-India, has slowly now started, removing India from his anti-nations, anti-tariffs rhetoric. Now, when I say anti-tariffs, I'm talking of where he said that they will impose tariffs on India further. In fact, he asked the EU to impose tariffs on China now, and now he's coolly forgotten about India. He says 50 to 100% tariff should be imposed on China because they are supporting the Russian war against Ukraine. Now, he knows very well that Ukraine war is a never ending war, and Europe, which is asking them to put tariffs, he is saying, I have had a problem with putting tariffs on India, and it is not my war. It is the war of Biden. And for that, our relationships with India has gone down. A candid admission that, India is his treasured friend, so he calls the Prime Minister Modi as his very close friend. So he's coming closer to warming up with India, which means we may see the 25% additional tariff may go away sooner than later. How sooner, we don't know. As of now, his mood towards India has changed for the better for reasons which we cannot decipher. But he's asking the European Union to put in tariffs of 50 to 100% on China. He has only named China. Now, European Union is getting all their oil, which is refined by Indian refiners and sent. So there is no way that European Union can put tariffs on India because they are now in the process of signing a free trade agreement. So they also have no chance of putting any tariff on China because China supplies a lot of things to European Union. And once if China retaliates, then Union is as good as dead, economically at least. So it's a nice psychological play which Trump has done, which is good news for India. And he calls this, as I said, Biden's war. So he is now washing his hands of coolly as far as the Ukraine-Russia war is concerned. Now look at where we are. The whole market men, I would say, are very bearish, especially the FIIs, who were having shorts of about 92% last week, beginning of last week. Incidentally, last week we went up again. So the smart guys have reduced their shorts as far as the FIIs are concerned. From 92, it has come to 88. 88 itself is very high. When the market peaked out somewhere in August, the shorts were only about some 55% or something around that, 45 to 55%. So we've got a long way to go as far as the short buildup is concerned to reduce. So the market now is having that fuel for the fire which may engulf the short sellers in the next 1 week. I'm very optimistic that next 1 week should be a good week because there are a lot of events there, especially the event of the Fed meeting, which is happening on Wednesday. So that will give a further fillip to risk assets globally. And this time, India is likely to participate, in my opinion. If you really look at where we are very close to the 21st August highs, which after 21st August, the markets are falling as far as Nifty is concerned. Bank Nifty, however, is much weaker. Interestingly, so now one has to see what Bank Nifty will do. And IT also has done a comeback and looks like the Infosys buyback has been received positively by the market, even though it is not very tax efficient. And as I've been critical of what Infosys has been doing, but that is how it is. I believe that Infosys is, the short termers are gaining, the long termers are losing as far as Infosys shareholders are concerned. However, the market is liking it, so there could be a possibility that next bout of sell buying may come in stocks like TCS, Wipro, and HCL Tech. So I will be looking forward to making some punts on these stocks next week. Interestingly, my favorite sector is metals, and in that precious metals, gold has made an all-time high. Silver has made a 14-year high. It has crossed 42, and copper has now been going. Copper has gone up significantly. Hindustan Copper, where we hold a position, has gone up significantly on Friday. So copper, I think, has got a long way to go up. And in my analysis, even gold and silver have got a long way to go up. So somebody was asking me what is the target of gold in the US. Right now, it is trading at around 3,600. The most bullish of the analysts are talking of 4,000 to 4,500. I mentioned this that the most bullish of the analysts on gold are actually are having bearish targets, which means I am expecting a significantly higher target over the next 1 year above 4,500. If you, I have mentioned it last week that every time the bull market starts in gold, there is a 10 to 12 year period. In that, the gold prices go up about 8 times. So the last bull market has started from 2015, or the current bull market has started from 2015. We've had two such bull markets in the past. In 10 to 12 years, the price of gold has gone up by 8 times. So if you take $1,000, which was around $1,000 in 2015, so we should logically see $8,000 by 27, 28, 12, 13 years. So we are nowhere near, overbought positions. However, technical analysts may say that gold is overbought because the RSI is above 80. So there could be a correction. Of course, in any bull market, you will get such corrections, but these corrections are not the end of the bull market as far as my analysis goes. Same thing with silver. I have been mentioning that silver, for instance, just 12 months ago, no sovereign had any position in silver. Today, there are four sovereigns actually. One is Russia, one is Saudi Arabia, one is US, and one is India. These are the four sovereigns which are now building positions in silver. So when the government start building positions in silver, silver is a very small market. So the movement could be much faster than gold. However, gold is much safer because you see, gold has got widespread, acceptance even in jewelry. Silver has got widespread acceptance as far as the industry is concerned, but there could be volatility because the industry itself may not do so well. But as far as gold is concerned, because it's got a widespread acceptance across the retail uh, population, so gold is that much more safer, and there will be many more countries who will be hoarding gold because of the downgrade of dollar. So we can see, in my opinion, significantly higher prices, and I'm expecting a correction, but I am prepared to buy more in the correction. Even on Friday, we loaded up on gold, silver, and copper, and whenever we get money, we will do that. So I feel the market is short, people are bearish, and we may see, a sudden rise in the market. People may give any reason, but the rise could be very sudden, very sharp, catching a lot of people on the offside, as they call it. And I would like to participate in such a rise. I would not like to be negative. I am not afraid of this market. So, whatever, please note, I'm not a SEBI registered advisor. I'm not giving any advice. My analysis says that in next 2 years, gold should be whatever price. Silver, in my expectation, is about $75. I'm expecting in the next 1 year. Gold, I'm expecting 4,500 for the next 1 year. It could be higher, but I am bullish that any fall we should be buying. So whatever you do, I hope it is successful. I hope you had a good day. Incidentally, I am not watching the India Pakistan cricket match because a true patriot will not watch it, in my opinion. But then, to each his own. If you're watching it, have fun. I will concentrate on something else. And thank you for joining me. Good evening.